Okay, get this. Imagine a company where on one day, the President of the United States says they have, quote, great warfighting capabilities, just ask our enemies. And then the very next day, Michael Burry, the big short guy, says a competitor is eating Palantir's lunch. We're talking about the same stock in the same week with two views that couldn't be more opposite.
Wait a second. So you're telling me the president and Michael Burry are on completely opposite sides of a trade? That's pretty wild.
So what stock are we even talking about here?
We are talking about Palantir. The ticker is PLTR. Right now, it's down about 35% from its all-time high, trading around $135. And get this, their earnings report is just around the corner on May 4th.
Okay, so that sets up the big question, doesn't it? Do you buy this dip or do you run for the hills? All right, let's dig in and break down the case for both sides.
First things first. To really get why there's so much conflict here, you've got to understand what Palantir actually does. So it was founded way back in 2003 by Peter Thiel, and it was built specifically for the CIA and the US Army. Their entire mission is to take billions of disconnected data points. I'm talking everything from drone feeds and satellite images to financial transactions, and fuse it all together into one single clear picture that you can actually use.
So this isn't just another company making like an AI chatbot?
Not even close. That's the key thing to understand. They have four main products. First is Gotham. That's their bread and butter for the military and intelligence world. Then you've got Foundry, which is for massive commercial companies. Think BP, Airbus, even Ferrari. Their big new push is AIP, their artificial intelligence platform for deploying AI securely and privately. And finally, Apollo basically makes sure their software can run anywhere, from a cloud server straight to a battlefield. The point is, they use AI for incredibly high-stakes, real-world decisions. This is way beyond just chat. Okay, so this is heavy-duty stuff, the real deal. Got it.
All right, now let's switch gears and see how this whole story actually looks on the price charts.
Let's start with the big picture, the long-term monthly chart. So it IPO'd at $10 in 2020, had a massive run up to 45, and then bam, it crashed all the way down to just $6 in 2022. I mean, those were some dark days for investors. But then it staged this huge recovery, got added to the S&P 500, and just went parabolic to an all-time high of $207. Which brings us to today, sitting at $135, a solid 35% correction off that top.
Whoa, hang on. From $6 to $207? That's a gain of over 3,000%. That's insane. So long-term, this stock has been an absolute monster.
An absolute monster for sure. But here's the catch. You can see a clear pattern. The stock makes a massive parabolic run. Then it has a big, painful correction, and then it starts another massive run. And right now, it looks like we're deep in the middle of another one of those big corrections.
Now, let's zoom in a bit to the weekly chart. What you see is a series of lower highs. We had the peak at 207, then it dropped to 180, couldn't get back up, dropped to 165, and now it's struggling to stay above 145. This is what traders call a classic distribution phase. It's a textbook sign that the big institutions, the smart money that got in way lower, are now slowly and systematically selling and taking profits.
And you said earlier that insiders are selling too? Oh yeah, and it's not a small amount. We're talking about $432 million worth of shares sold by insiders in just the last 3 months, and almost zero insider buying to offset it. Look, when CEOs and the founders themselves are consistently cashing out their own shares, that's a pretty big red flag the market pays very close attention to.
Okay, that definitely sounds bearish from a technical point of view, but what about the company itself? What are the actual numbers telling us?
Well, this is where the whole story gets complicated, because this is where the bulls get all their firepower. The fundamentals are frankly incredible. In their last quarterly report, total revenue was up 70% year over year. Government revenue grew a really solid 55%. But the US commercial business, which is being powered by their new AIP product, just absolutely exploded, up 137%.
Wow, those are fantastic numbers. So what's the problem? What's the catch?
The catch is the valuation. This slide perfectly captures the Palantir paradox. On one hand, you have this stellar growth, $4 billion in cash, and literally zero debt. But on the other hand, you've got a stock trading at a price-to-earnings ratio of 100. A popular valuation model called GF Value says its fair price is closer to $61. And then, of course, you have that huge insider selling. Whoa, back up. A fair value of $61? That's less than half of where it's trading right now. So it's just really, really expensive. Extremely expensive. And that, in a nutshell, is the entire bear argument.
Okay, so this is fascinating. You have these incredible fundamentals crashing right into a sky-high, maybe even absurd valuation. Let's really lay out the full bull versus bear debate.
All right, the bulls will tell you, look, Cathie Wood is buying this dip. They'll point to the fact that Palantir just signed the U.S. Army's largest contract in history. They'll scream about that 137% AI commercial growth, which is the fastest in the entire AI space. And they'll quote Wall Street analyst Dan Ives, who calls Palantir the operating system of the AI era. The bears, though, they're following Michael Burry. They say competitors like Anthropic are simpler and cheaper. They're pointing to that $432 million in insider selling, and they keep hammering on the valuation, saying a PE of 100 means the company has zero room for error. One bad quarter, one misstep, and the stock could crash. Man, both sides make really compelling points. So with earnings right around the corner, this thing could go anywhere. How could someone even think about trading this? What's the playbook?
Okay, let's get tactical and map out the key price levels. We're at 135 right now. The first major hurdle overhead is that 145 to 150 zone. That's a bearish order block, which is just a fancy way of saying we expect a ton of sellers to show up there. If it breaks through that, the next big resistance is 165 to 170. Now, to the downside, the most critical level to watch is right below us from 125 to 130. This is a huge bullish order block. Buyers have stepped in here again and again. In fact, when that Burry news hit, the stock tanked right to this zone and bounced hard. For now, this is the floor.
So based on those levels, we can map out two potential trade ideas. For a short position, you could look for an entry if the price rallies up into that 144 to 148 area with a tight stop loss right above at 153. Now for a long position, you'd want to be patient and wait for a dip into that support zone, looking for an entry between 125 and 128 with a stop loss tucked just below it at 118.
So basically you're saying look for a short trade above 144 or look for a long trade below 128. But whatever you do, wait for the price to come to you. Don't chase it here in the middle.
Exactly. The number one rule is don't chase. Let the price come to your level.
Okay, so let's wrap this all up with the key takeaways from this whole breakdown. Number one, Palantir has, without a doubt, one of the strongest fundamental growth stories in the entire AI sector. Number two, the short-term chart is clearly bearish, and it's testing that absolutely critical support zone around $130. Number three, the key levels for potential trades are that 125 to 128 zone on the long side and 145 to 148 on the short side. And finally, remember that the May 4th earnings report is a massive, game-changing catalyst, and you have two legendary investors, Cathie Wood and Michael Burry, on complete opposite sides of this trade.
So it all comes down to this. You have Michael Burry, a legendary bear, betting against it, and you have Cathie Wood, a legendary bull, betting on it. One of them is going to be right and the other is going to be very wrong. The only question left is, which side are you on?